Understanding the tax benefits of an LLC can greatly improve your financial position and help you keep more cash in your pocket. That is why in this video, I am going to show you how to save on taxes by having an LLC and break down everything that you need to consider. But before we jump in, I'm gonna need you to like, comment, and subscribe so you don't miss out on any of this wealth building information. An LLC is a pass-through entity. A pass-through entity is an entity that is going to ultimately show its income or loss onto your individual tax return. If you are a single member LLC and you file a Schedule C inside of your 1040 return, or even if you are a multi-member LLC and you have a K-1 form that is going to be reported onto your individual tax return, all of your write-offs can be utilized to go against your other income that is reported on your return. So realize that pass-through benefit can really help you. As an LLC, making sure you take all of your deductions is so important. These deductions need to be recorded on the tax return of your LLC, whether that is the Schedule C tax return or the 1065 as a multi-member. Deductions that you want to make sure you're taking advantage of are your car expenses, are your home office expenses, are your cell phone expenses, anything that you are utilizing for business. How about your internet expenses? How about your Apple ID? All of those things that we're paying for in order for us to operate our business that we may not be thinking about, we need to get as a deduction on our LLC. Self-employment taxes can increase your tax bill when you're inside of an LLC. That is why it's so important that we manage the way that we have our income flowing inside of our LLC. If our LLC starts to become profitable, meaning we're going to have profit of more than $400 per year because our business is really starting to grow, now we got to look at whether we should maintain the LLC or whether we should switch the LLC to a different type of entity, probably an S-Corporation. But understanding when to make that switch is mission critical. I tell people typically around $50,000. Why do I say that? Because some states have a minimum tax, and $50,000 gets you to the break even of the minimum tax for you to switch into a different entity. Tax elections, when you have an LLC, can definitely help you. When you are an LLC, you are typically going to be a single member LLC filing in with your 1040, adding a Schedule C to your actual 1040 return. However, you can elect to be an S-Corporation by filing Form 2553. You can also elect to be a C-Corporation, but make sure you do not do that until you get professional help, because you only want to become a C-Corporation if you have the income to sustain it, or you're looking for major investors and you're going to be issuing stock. So the tax election really will drive your tax liability. As an LLC, you can have retirement contributions. Because you're considered to be self-employed, you're going to have earned income coming in from your LLC. Your net profit is considered earned dollars. Earned dollars means any type of income that we have to pay self-employment tax on. When we have a W-2, we're paying self-employment tax through Social Security and Medicare tax. When you are taxed as an LLC, you're paying that 15.3% self-employment tax. Therefore, you can set up a SEP and contribute to your retirement account to minimize that tax. That is really important. Realize that you can get your own self-employment retirement account. You can have a simple account, but you can contribute to retirement that is going to lower your overall tax bill and make certain that you're getting the best bang from your LLC. The QBI deduction, the qualified business income tax deduction, allows business owners that have LLCs to get a deduction of up to 20% of their net profit taken off the bottom line of their net profit to lower their income tax. You don't want to miss out on the QBI deduction. So what's really important is making sure that you record all of your assets on your books, making sure that if you have any type of payroll going through your LLC because you're paying others, that you record that properly because you want to max out the QBI deduction that you can get from being an LLC owner. Also, as an LLC owner, record keeping for tax savings is mission critical. Many of you that are starting out your LLCs are still commingling funds, meaning you're using your personal credit cards, your personal bank statements to operate your LLC. I'm gonna tell you to go right now to get yourself a separate bank account. Even if that separate bank account is still in your individual name and not in the name of your business, just having that separation between your personal income and the income of your business is really a big deal in the eyes of the IRS, because immediately IRS thinks if this person took that overt act to establish a secondary account, all the income for the LLC is going in that account, all the expenses are being written through that account, that states that you're truly trying to do business. It's so important for you to organize your books and records properly. As an LLC owner, just because you're in one of the most simplest forms of a business, do not think you do not have to manage your business properly. Some of my best businesses, most profitable business owners that have the least amount of taxes, business owners that keep the most money in their pocket are LLC owners. But what is it that they do? They manage their business by having proper accounting records. They are tracking everything. They're using their QuickBooks. They're using their accounts, and they are dialing in their KPIs, their key performance indicators. So make certain that you are spending time managing your business. Make certain that you're spending time reducing your tax bill. Stop just thinking about your tax bill in January, February, and April, and think about your tax bill all year long. People that think about reducing their taxes all year and are mindful of keeping their records straight typically have lower tax bills. Now that you know better, I'm going to require that you do better. I want you to share this video. I want you to save this video. I want you to like, comment, and subscribe. Yes, all 5 of those things, because you can afford to miss out on any wealth building information. Now go get after it.